Yeah, good morning, everyone. So we are seeing some bounce back uh, after 3 days of consistent pressure in the US market. Futures of the US market are showing some reversal, mainly driven by Asian market and specifically Japan, which came off very sharply yesterday by over 12% and today bounced back by almost 9%. So that is giving good reversal sign for the world. The pain point, which was Japan this time, is showing reversal. And similar is the case with even Kospi, which came off very sharply, showing up move. So seems like for time being, the impact of large selling, which was unwinding till yesterday, is likely to stop. May see some bounce back in the near term. Yesterday, we also saw a sharp decline in Indian market as well. And here again, the reversal is expected in today's trade. Now, even the commodities are more of a stable today, not seeing much fall further, but not even seeing the bounce also. The oil is at flat level as same time yesterday. Aluminum is also flat. Copper is seeing some decline. Iron ore and steel are down by almost around 0.51%. So seems more of a comeback day. So should continue to see whatever the opening is there. From there, we may see some positive momentum during the day. And I'll request technical team to take up from here.
Yes, thank you, Secretary Minister. This is Swati. Today we are likely to open with a gap of opening and as per has specified the reasons for the same. On the technical front, 24,240 will be the immediate resistance level. Any about the same will see the extension of this pullback rally towards 24,340, 24,400 levels. Whereas on the downside, 23,940, 20,870 will act as a crucial support levels. On the Nifty front, the view is a bit cautious only, but definitely we are likely to witness the pullback rally on an intraday basis. Coming towards the Bank Nifty, yesterday we have seen that the sharp decline in the Bank Nifty as well somehow managed to gain the 50,000 psychological mark and closed about the same level. Going ahead, 50,640 will act as an immediate resistance. About that level, 51,000 levels can be tested. 51,340, then the next level we can see. Coming towards the support levels, 49,700, 49,500 are the crucial support levels for the Bank Nifty. Coming towards the Fin Nifty, 23,000 and 22,140 are the two resistance level we need to watch out for, whereas the support is placed at around 23,640, 22,740 levels. Stock specific Asian Paints clearly looks good and the technical plan the stock is forming the flat pattern formation. We believe that we are likely to witness some positive momentum towards at least 3150 to 3200 levels, and we already have a buy call on monthly call on the Asian Paints, so one can definitely hold their long positions for immediate target at 3200 levels. That's it from my end. I request derivative team to take a call from me.
Yeah, thank you. Good morning, everyone. So on the derivatives front, as you have seen that in yesterday's session, as the support of 24,600 got broken out, we have seen that a continuous selling being witnessed on the downside. But on the downside, we are seeing that as per the put writer position on the monthly basis, 23,800 is acting as an immediate support level for the market. Once if 23,800 level gets broken out, then next leg of selling will start towards the 23,200 to 23,000 mark. But till the time 23,800 level is not getting broken out, till that point of time, we might witness Nifty to be in the supportive base, and the buying will be witnessed on the upside towards the 24,400 to 500 level. If in today's session Nifty managed to give close about 24,300 level, then we might expect some stability. Now we will compare Nifty and India VIX together, as we have seen that India VIX in yesterday's session almost shooted up by 42%, giving close near 20.30 levels. So the resistance for the India VIX on the upside is at 26. Once if India VIX goes about 26 level, and after that point of time, we might witness some panic creation or some more short position to be initiated once if it goes about 26 level. But till the time it's not going about 26 and Nifty is not going below 23,800 level, till that point of time, we will see them pull back from the supportive base, and on the downside the support for the India VIX lies at 17. Once if India VIX goes below 17 level, then again stability will be witnessed in the market. So both on the OI front and the India VIX front, we will see if the data is getting changed or not. Till that point of time, we will hold the long positions, or new long positions can also be created with the support of 23,800 level. While PCR yesterday closed at 0.72 level, PCR is yesterday closed near to oversold zone. The support for the PCR on the downside lies at 0.58 to 0.62 level. Once if PCR comes near again 0.5 to 0.62 level, at that point of time we will see some pullback. While on the upside, the PCR resistance is at 0.88. Once if PCR goes above 0.88 level and Nifty managed to give today's closing about 24,300 level, then we will see again buying momentum in tomorrow's session also. So in today's session, we will see some range one momentum in the market with a resistance of 24,300 level. While on the FI front, FI on the yesterday was at 10,000 crore on the selling front, but against that, DII gave the support to the market with the 9,000 crore of buying. So we are seeing the neck to neck long and short positions is being created from the FI and DI front on a daily basis. So overall momentum in today's session for the market seems to be on the range bound session, but in the first half we will expect some buying momentum on the Nifty towards the 24,400 to 500 level in today's session. While on the stock specific and sectoral specific front, we expect counter that looks positive. This session will be Tata Consumer, Cummins and Britannia looks positive, while on the negative front, LTTS, Bsoft and IndiaMAX look negative today's session. So that's it from the front. Thank you.
Good morning. On the result side, Schneider Electric Infrastructure result has improved. Order inflow was up 19% year on year, while order book was up 5% sequentially, 16% year on year. Revenue was up 26% sequentially, 20% year on year. EBITDA margin came at 13.8% against last year's 10%, but March quarter margin was 15.5%. Profit is up 40% year on year. We remain positive. Syrma SGS Technology result is below expectation. Revenue was flat quarter on quarter and up 90% year on year, and revenue was 20% above estimates. However, margins fell sharply from 6 to 6.5% levels seen in last 3-4 quarters to 3.8% levels. So it was a sharp decline. If you recall, during IPO time 1.5 years back, the margins were almost close to 9 to 10%. So from double digit levels, they have come down to 3.8%. So overall profits came at 19 crores versus estimate of 28 crores and last year profit of 29 crores. We are negative in the near term on Syrma. Triveni Turbine result is above expectation. Order inflow came at 636 crore, up 40% year on year. Order book increased 23% year on year and 11% sequentially. Revenue was flat quarter on quarter and up 23% year on year. EBITDA margin improved to 20.6%. It improved 1% sequentially and almost 2% on a year on year basis. Profit came at 80 crore against expectation of 72 crore and last year profit of 61 crore. So a positive set of number from Triveni Turbine. Thank you.
Good morning. I would like to start with the few takeaways from the con calls. Firstly, on the Britannia Industries, The management has observed overall improved rural demand, which is expected to support the Britannia's overall performance for the year. Management highlighted that they are more focused on top line growth, which has observed a weak performance in the last year due to elevated inflation. It expects operating performance to be maintained for FY25. And in terms of costs, it aims at 8 times reduction in cost in FY25 compared to FY24. Also, it will focus on rationalizing spends on advertisement in the subsequent quarters, as it was higher during the Q1. The company is expecting higher operating income, which is on account of some benefits from the units in UP and Bihar, and it expects higher benefits from the Ranjangaon facility. Overall pricing is expected to be at same level, given the management is expecting inflation to be in the range of 4 to 5%. And also the company is focusing on the new launches, which is mainly focused on the regional preferences and premiumization. The stock is trading at a PE of around 49 times to FY26 EPS, which is believed to be fairly valued. Thus, we are neutral over the near term. However, one can accumulate for a long-term investment horizon. Asian Chemical Industries Limited result had a con call yesterday where the result was below expectations. It has seen the revenue degrowth of 38% on a YY basis. So during Q1, it has seen dispatch and delays of industrial salts due to the seasonal shift that they had in the logistics from Jakhau port to Mundra port. So this is generally happens before the monsoon period in April. And there was a shortage of trucks for the movement of industrial salt from plant to these ports. The management expects this as a temporary situation, and while there was no impact on the demand, which remains firm based on the long-term contracts they have. In terms of bromine, the bromine pricing has been stabilized, and the management doesn't expect any significant drop in the near term. It has acquired the Oren Hydrocarbon through its wholly owned subsidiary, that is Idealis Chemicals Private Limited. It is expecting the NCLT approval, which is pending. And however, the company has already started the groundwork to restart the plant. For the same, it has an investment of rupees 40 crore plant, which will be done in a phased manner. And it expects revenue worth rupees around 200 crore from this investment. Overall, the FY25 capex guidance is at rupees 252 crore, where it has already spent rupees 140 crore till date. Also, in terms of the bromine production, the guidance remains at 22 to 25,000 metric tons in FY25, and second half is expected to be better than first half. The stock is trading at a PE of 14 times to FY26 EPS, and we are positive on the company with a long-term view. On the results front, Marico Limited result was in line with expectations. Revenue grew by around 7% on a YY basis, where the volume growth stood at 4%. Operating margin stood at 23.7% versus expectation of 23.5%. In the con call, the management highlighted that the pricing growth is likely to be there due to mild inflation, mainly in copra prices. It expects volume growth to be more than 4% in the upcoming quarters. Also, it aims to deliver double-digit revenue growth during FY25, which will be supported by the domestic volume growth and favorable pricing. Overall margins are expected to improve gradually over the next few years on the back of benefits from the leverage and the focus on premiumization-led portfolio across India as well as international market. The stock is trading at a PE of 47 times to FY26 EPS, and we are neutral on the stock. Tata Chemicals Limited posted the results broadly in line with expectations. revenue degrew by 10.2% on a YY basis. Overall sales volume grew marginally, where India had a stable volumes. The degrowth in revenue was on account of lower realizations. Operating margin reported at 15.1% versus the expectation of 15.5%. The stock is trading at a PE of 22 times to FY26 EPS, and we are neutral on the stock. Deepak Nitrite Limited posted the results in line with expectations. Revenue grew by 23% on a YY basis, and operating margin reported at 14.3% versus the expectation of 15%. The stock is trading at a PE of 33 times to FY26 EPS. We will provide the outlook post the con call. Thank you.
Good morning. Bharti Airtel numbers have come below expectation. The average revenue per user came at rupees 211 versus expectation of 213. So last quarter it was rupees 209, and a year ago it was 200. The revenues and EBITDA margins were below expectation of the analyst. Revenues were mostly affected due to currency devaluation in African region. The stock is available at 41 times 1 year forward earnings, and we are positive about the stock. Bharti Hexacom results were in line with expectation. The ARPU has come at rupees 205. Last quarter it was 204, and a year ago it was rupees 194. The stock is available at 43 times 1 year forward earnings, and we remain positive about Bharti Hexacom as well. Today, two IPOs are coming for a subscription. The first one is BrainBees Solution Limited, which operates one of the largest multi-chain retail platform under the brand FirstCry. It focuses in a niche area of providing goods to the mothers, babies, and under 12 kids in India. It also has operations in UAE and Saudi Arabia from the last 3-4 years, and to further to leverage its experience in creating and scaling up brands, company has also established a platform named Global Bees, where Indian and global D2C brands sell their products online as well as offline through modern stores. So net FirstCry provides holistic services in parenting categories, wherein it also provides parenting content and develops rapport with the mothers at a very early stage of conception, and extends this bond by even providing other ancillary services like pre-primary schools, etc. The total issue size is 4,194 crores, which consists of fresh issue of 1,666 crores and offer for sale of 2,528 crores. These funds would be used to set up new modern stores and as well as warehouses. The price band is 440 to 465 rupees. The issue is opening for subscription today, 6th August, and it will close on 8th August. FirstCry has created a niche space in the mothers and early kids age category, and it has strong brand remnants as well. The revenues of the company have grown at a CAGR of 34% during FY22 and 24 when we look at a pro forma adjusted revenue basis. While India business has been making margins of around 8.6%, its international business continues to bleed at operating level. However, management is confident of replicating the India success story internationally as well. On the backdrop of changing retail and e-commerce dynamics, mother and childcare product market is expected to grow at a CAGR of 13 to 15% in the next 5 years. The shares are available at EV by sales of 3.8 times FY24 sales, which is lower as against when we look at Nykaa, which is trading at 8.4 times on the basis of EV by sales. So given FirstCry's leadership position in the niche segment of baby products, we recommend subscribe to the issue for a long-term basis. There's one more IPO coming up. I request my colleague Rahul to take it up. Thank you.
Yes, a company by the name of Unicom eSolution Limited will be going live today. The price band is 102 to 108 rupees. The total issue will be of 277 crore, which will be completely from offer for sales. talking about the company was incorporated in 2012. It is a SaaS platform that manages e-commerce operation for brands, sellers, and logistic providers. These products include warehousing, inventory management system, multi-channel order management system, omni-channel retail management system, seller management panel for marketplace, post-order service for logistic tracking, courier allocation, and payment reconciliation system. Some of their clients are Mamaearth, Fab India, Imami, Lenskart, and Expressway. The e-commerce industry is expected to grow at a CAGR of 24% till FY 2027. The company has significant existing product expertise which can help with limited investment. The company revenue has grown at a CAGR of 32% during FY 22 to FY 24, and the EBITDA has jumped at a CAGR of 59% during the same period to 18 crore rupees. Uh, the company is poised for high growth in next few years. Shares are highly priced at PE of 83x FY24 earning. Thus, we are giving neutral rating for the issue. Thank you.
Yeah, ONGC reported its number, and number were marginally below expectations, though revenue came in line or marginally ahead, and volumes were also stable. But due to one-off expenses related to charge by the government for sharing the oil and gas, the EBITDA came bit lower than expected at around 17,000 crores versus expectation of 17,200 crores. So marginally below, more will be driven by the oil prices, which has come off in recent past. So if we see some revival in the oil prices, then stock can stabilize and move. But apart from that, Som Distillery came up with the numbers, and number has shown good improvement. The sales has grown by almost around 33% year on year. This is the seasonally best quarter for them, and in that the revenue has grown substantially. And also the EBITDA margin were also stable year on year at 12.5%. Stock is trading at 25 times TTM EPS, which looks really reasonable for branded company. They had some problems of some labor issues in one of their group company plants, and where they had some notice from the government and all. For considering that the stock has corrected, we will get more clarity on in the call whether these problems got resolved. Then the valuations looks attractive and outlook seems positive post that confirmation. That's all from us. Now I'll request commodity team to take up from here.
Yes, sir. Thank you very much. Good morning, everyone. So in today's session, we might witness some profit taking followed with the fall yesterday. Gold can test 69, 200 to 100, whereby one can initiate a buy for a pullback on upside. Prices should be capped at 69, 500 to 700 levels. So profit taking is expected on these levels. Silver, one can buy around 70, 79, 200, 300 levels. A pullback till 80,500, 81,000 is expected, whereby again selling pressure could be witnessed. So for trading purpose, one can also initiate a sell around 81,000. And however, prices are supportive at 78,000. So buying on dips is also recommended, maintaining a stop loss below 78,000. In crude oil, we are expecting a pullback till 62, 80 to 6,300. So buying on dips around 61, 80 is recommended with a stop loss of 6,100. And from 6,300, one can also initiate a sell with a stop loss of 6,880. And in natural gas, a pullback till 170 is expected. If prices are sustaining below 170, then we might see further sell-off. So for trading purpose, one can buy around 163 and maintain a strict stop loss of 158. And on upside again 170, one can initiate a sell with a stop loss of 178. In metals, if copper prices are sustaining above 775, then we expect prices to pull back till 785. Again, 785 prices are expected to remain under pressure. So 785, one can also initiate a sell with a stop loss of 791. And if prices are sustaining below 775, then we might see further correction till 768 to 765 on the downside. Also, zinc, if prices are sustaining above 246, then we might see a pullback till 250, 51 levels, whereby again selling pressure could be witnessed. So one can trade uh, uh, within this range, where the upside is capped at 251 and downside it is supportive at 246. However, below 246, we might see further correction till 242 levels. So that's it from us. Thank you very much.